Good morning, good afternoon, good evening. My name's Depesh Patel, editor at Trade Treasury Payments, and on behalf of Commodities People, we're super excited and delighted that you've all joined right at the heart of LME Week in London, this very important presentation and panel session called The New Trade Finance Reality: Surviving the Squeeze on Credit and cross-border deals. And given everything that's going on in the world today, kudos to the Commodities People for coming up with this title quite a while ago. And today, I'm sat here in London. This topic is probably at front of mind for all of you listeners. So the structure of today's session, and we really encourage you, our listeners, to be as interactive as possible and take part in the discussion, is to really open up conversation around the changing landscape for liquidity, for trade, supply chains, and the financing of that, the squeeze of credit and what this means, not for the large overbank traders, but for those smaller, mid-sized corporates, all the way down to SMEs, not just in developed markets, but particularly in emerging and developing markets. So to start off, I'm going to hand over to the managing director of TCF Partners, Sven de Zotten. Sven, welcome, and over to you now for a quick presentation, about 10 minutes or so on kind of what's going on in the landscape. And if we can ask you to set the scene, and to our listeners, we really encourage you, anonymously or non-anonymously, to add comments, add thoughts, raise your hands, and use the Q&A function to make this a really interactive discussion, because we won't be afraid to cut presentations short, cut questions short, and really air the views and the thoughts of our listeners. So Sven, over to you. Thank you.
Thank you, Deepesh, and for that introduction, and thanks to Commodity People giving me the chance to say a few things and to dive into it, because as said, we just want to warm up and we have a very good guest in the panel, so I won't take too long. Being in commodities most of my adult life, the question always is put forward is saying, what is the landscape? How does it look going forward? What is trade doing? And are we expecting any volatility or decreases of what? And basically, what I want to say there, and I think a lot of people might know, but to say that people need to be aware that in the past 20 years, trade in general, and this is not just commodity trade, but trade in general, cross-border trade, has come up from 5 trillion to 33 trillion in 2024, which is an immense growth in itself. These are numbers, I have to give credit to UNCTAD, who are following this greatly. But what it says to me is that it is huge, the world of trade, and 32 trillion on an annual basis. It means that goods are delivered and paid for in these amounts of money on an annual basis. So if you look at sanctions, tariffs, political risks and everything, I wouldn't say that in the past 20 years nothing has happened. So there are disruptions anywhere. And I've set as a question mark, will it ever decrease? I dare to say that the overall amount of trade is not decreasing. And there is enough for everybody to get their hands on. That's what. Of course, you have seen that over the back of that growth, large traders have grown with it. And they are sort of the darlings of banks. They have large balance sheets. They actually, their performance is better than the average bank at the moment in terms of bottom line profits. So banks have always been in their foundation very keen on balance sheet lending because it is easy. This is something banks understand and can read, as you say. So uh, uh, the bigger the balance sheet, it can absorb mistakes, so you don't have to look at the individual underlying trade of a company, and that's the big difference to small cap clients or mid cap clients is that banks in a way do not understand in a way they don't want to understand or take the effort to understand. Maybe next page. So although we all hear that the SMEs have great difficulties in finding financing, mid caps as well. The bigger you are, the more bankable you are. But it's not so much that as a small firm you're unbankable in itself, but the financiers just, as said, they don't understand. Your information is unreadable to them, and therefore they shy away. It is also, of course, a workload thing. Banks do not want or want to take the time or have the time to really go into how they could finance smaller entities. And so the story there is for smaller entities is what can you do? Well, and throughout this, but later also in the panel, but now, and the big sort of game changer is, and even in the world of commodities, is a little bit of the AI here as well. So there are now tools out there which can help you organize your companies, organize your trade in such a way that people do understand and feel comfortable with what you do. So it's not something that is changing the world of commodities or trade and commodities. No, it's not. It's not new. It's just that there is the capacity now to give a deeper level of insight and therefore a higher level of comfort. And next slide, please. So the winners and losers, of course, is the wins in terms of the trade. But I think I took it from a different angle, is to say why, despite the fact that the world of trade has grown so significantly, why is it still sort of the digitalization of it has not really picked up over these years, and not for the lack of trying, but I think an observation is that a lot of the times it was that you as a person needed to adapt it to the tech, which I mean, I've been around long enough, and I've seen every system and everything, and that normally meant that you needed to change your way of working to meet with the actual technological development. So that has probably prevented it. It's still there is a lot of Excel sheets going around, but and relatively recent, but it is going off. And in the panel, people who have more insight to it than me can give you further insights to it. But the tech is now catching up. There is a game changer, I would say, in the tech world, which means that all of your data, and I mean all of your emails, documents, attachment, everything can be accessible and can be read and digitalized. In terms of AI, the big thing change there is that you can basically employ, in a way, AI agents to do certain tasks. Plus, you can have these agents. Actually, you can train these agents, and that's of course the new thing of AI as well. So yeah, we say you finally have tech that will listen to you and make your life easier instead of more complicated. Next slide, please. So with that, of course, if you're in control of your data, and you yeah, how do you say this? You can show this to other people. Then the risks you face on a daily basis, whether it's political risk, currency risk, all of these risks, because you can identify them easier and cover them easier just by the the clarity you can give over the underlying transactions and the quickness of you doing that. You're basically making yourself comfortable and there with potential lenders or potential counterparties as well. So the perception of risk will come down over the back of you implementing the right digitalization, basically. Next slide. I'm rushing through it there. So I think the argument in the panel as well is that data almost becomes a new commodity, which is slightly different. This is not what I mean here. It is your own data, and data is a bigger. If you look at a small trading company, even to do a single trade, the amount of emails, the amount of documents, the amount of maybe WhatsApp's communication around it is immense for even a single trade. But all of that creates data for you, which if you have this digitally available, it can help you going forward. So you start using your own data to become better going forward, and that's now what can become reality. And once you have that data and it is readily available to you, you can take decisions based on that, but fundamental decisions. And again, which is going to have a benefit to you. And I think here, especially, and I will say this, that this is for small companies even more accessible to the large traders. So there is going to be an advantage in a way to being a small company. Next page, please. So yeah, as I said, there is an opportunity for smaller companies now. There is a role for you to play. There is tech that is easier implemented at your level. If you are a huge company, this is not going to be easy, and of course it will, but it can give you an extra edge in where you are. And the extra edge means that you don't have to knock on the door of the large competitors for help, but you can stand on your own feet. And yeah, I said it. I look. I do as if it's all done and dusted. It is in relatively early stages, but it's going very fast at the moment. And I have the pleasure of being close to people who are looking at this on a daily basis, and it's really starting to take off. And small to medium-sized companies, you need to embrace this. This is going to help you tremendously going forward. I will stop here.
Thank you very much, Sven. And whilst I invite my panel to come and join the conversation, I ask the audience if there are any comments or questions at this stage, please feel free to ask them or your comments and thoughts, and we can address them throughout the panel session. Just to kind of summarize, I think five key points from Sven's presentation. Global trade's grown massively in just 20 years, and despite everything that's going on in the world, sanctions, tariffs, various wars, trade continues to expand, not shrink. Bigger traders get finance cheaper because they have deeper pockets to organize their data better, but smaller firms often lose out. One big obstacle to digitization, in your opinion, isn't just reluctance to change, but actually the lack of time to rebuild some of those core systems. If a company can make its data more transparent, it can lower its political and credit risk, and we need to create the framework for clear, verifiable information. And last but by no means least, SMEs now have access to the same digital tools as some of the banks. And now it's how do we ensure that we level the playing field with the rise of, great tools like artificial intelligence, but in a sustainable and sensible play, which is great because you really set the scene and we don't need to do a big introduction now. But I'm delighted to be joined by Vashti Maharaj, who is an advisor for digital trade policy at the Commonwealth, and Carol Valken, strategic advisor to the board at Radar. So thank you very much to both of you, and Sven, welcome back. If you could all just very quickly give a quick introduction, just talk about what your day job is in 30 seconds, and also specifically why this topic matters to you, which is how do you survive the squeeze on credit and cross-border deals? Vashti, over to you first, please.
Thank you very much, Depesh, and thank you as well for the Commodity Trade Finance team for having me. As Depesh mentioned, I am the advisor digital trade policy for the Commonwealth, and my role is really to be that change agent for digital transformation. And we do this in many ways through legal reform, through capacity building, and working directly with MSMEs, as well as working with senior government officials and policymakers to lay that foundation. Why this is really important, and Sven, thank you, that was an exceptional presentation that you've summarized a lot to really say that small businesses can now be masters of their digital futures, and they can actually be part of that global value chain. And this is all because data is that catalyst and how we use it. I look forward to the conversation that we're going to have, and I hand it back over to you, Dipesh.
Carol, over to you.
Yes, hi. Thank you again for giving us the audience. I'm myself strategic advisor for Radar, but have been active in financing commodities for most part of my life. And I think at this moment, Deepesh, we're living in unprecedented times. We've seen volatility exploding. We've seen an ongoing consolidation. If you look at some of the markets, take coffee, the big six coffee merchants are good for 60% market share. The big four cocoa players are good for 60% market share. And if you look at the big four energy traders, probably likewise. Would that mean that consequently the market is in the hands of only the big companies? Partly yes, but I think there are plenty of opportunities for the SMEs. Why? Because there are markets, some markets the big companies don't want to touch, and moreover they tend to be much more agile. A little bit echoing what Sven was saying, it's a lot about also the ability of companies to adjust, being agile and use the digitalization to basically capture the opportunities and capture the risk. So I'm looking forward to this discussion. We will have some discussions, Vashi, on the model law and let's say the digitalization of trade, and to what extent that would help, let's say, SMEs in capturing the business and capturing the risk. Thank you.
Thank you very much, Carol. And let's just jump straight in. I think broadly speaking, let's try and cover three kind of core pillars. First of all, around legal reform and what's going on in the digital trade space. There's a lot to unpack. Sometimes I think it's going really slowly, but then I take a 12-month view and I'm like, wow, quite a lot's actually changed. So Vashti's going to kind of talk through that. Then I'd like us to talk about inclusion by design. How do we ensure that SMEs, women-led companies, and fintechs large and small are all included in an interoperable standardized way. And then it's talking about, I'd like us to talk about how we navigate through the kind of current political risk scene that we see. How do we hedge in an era of tariffs and blocks? I think we all discussed large commodity traders tend to win, but that doesn't mean everyone. So to Carol's point and question for Sven, Carol, you mentioned 60% are the kind of market share, the big four, the big five. But let's talk about the 40% here, and I'm talking kind of sub $25 million ticket deals. What alternative lending structures, Sven, I guess given your role at TCF and Partners, are you seeing SMEs actually use to scale their deals and grow?
Look at the moment, and I think we're facing it, and it is well documented as well. The ability for SMEs to find financing is quite difficult. The bank world is just not there, not at all, and so they are basically there is two streams they can use. It's alternative financing, funds and the likes, or and Carl had the pleasure of being at a large trading company in his career at some stage. Large trading companies are the big financiers of the commodity world, using the cheap funding they get from banking and then finance the rest of the planet. The problem there is, as a small company, you're basically inviting the competitor. So if your trades become quite lucrative, large trading companies will not shy away from sort of taking that over from you. So you're inviting the competition. So it is very difficult still at the moment, and I'm afraid there is not yet a readily available alternative. But as said, I'm cautiously optimistic going forward. But the problem you have, and this is a bit coming back to the size of the overall trade market, it's so huge that everybody can be picky. I mean, there is enough. So even funds where you think, you're making 1% a month, 2% a month, 3% a month as interest rate, which is, in my youth, you looked at The Godfather, and that sort of was where that sort of interest margins were charged. But it's there, and people are using it. But even these funds are picky. They say no quite a lot because they can. They're not. If you have money to fund, finding deals is not the most difficult thing, funny enough. Although, having said all that, we are approached by funds that use us to find business, and we are used by business to find funds. So
Yep.
Good for us. We're still in the middle trying to bring everybody together. But yeah, it's still difficult at the moment. And there is not at the moment a magic structure other than receivable finance. Receivable finance, if you want to do receivable finance, go. The world is your oyster. There is a lot of that going around.
Yeah, I mean, it's interesting, but I always like to look at things kind of pre-shipment or further.
Yeah, no, I fully agree.
Further.
But the receivable financing people find inventory financing very, very scary.
Carol, what's your view? Is there another type of credit that's looking to fill the gap? Is there ample liquidity in the market? I think I know the answer to that question. You know, are we just or are we just kind of moving the risk and price points around the stack? So let's start with you talking about the kind of liquidity.
I think, I mean, that's for sure. I mean, no doubt there's, it's not a question of is there enough liquidity, but can supply of that liquidity find the demand, and what is needed for that, and Vashti, with the legal reforms, there is maybe, you know, very slowly, and for people with a long horizon, when indeed e-commerce, or at least e-bills of lading and so on, are coming into play, then there's more opportunity. I've seen over the years the number of funds slowly growing, particularly I would say for Latin America and partly Africa, because not surprisingly that is where the need is often for importers or exporters. I think with the lack of legal infrastructure in a number of emerging markets, ownership is the answer. So I've seen quite a bit of companies moving into the repo business. So either traders using repo structures to finance themselves for goods on the high seas or in emerging markets. And then there were, you know, groups of people who have sufficient funds or are using excess credit lines to come up with repo structures. So companies like Steinweg, or companies even like Duferco, are using their own lines of credit and infrastructure to do repo structures in emerging markets for smaller companies, as the big companies have access to bank lines. So the answer is yes, there are alternative structures, but on the whole scope of things, it's still relatively small.
So picking up on your point about emerging markets access, and Vashti, question for you, and I think it's quite relevant, given the news from the Commonwealth last week, which I'll let you talk to our listeners about. But how, you know, why, in your opinion, do you think we need legal reform to help harmonize some of this framework? Because I think Carol mentioned, you know, title is an issue, and actually recognizing title on some of these important trade documents is critical, and Commonwealth plays an important role in that, right? But can you give a lay of the land, first of all, and then talk about what the Commonwealth has done to address this problem?
Absolutely, thank you. So why do we need legal reform, and why are laws or amendment to the laws necessary? It is simply because for two countries to trade, there must be interoperability. So if one country recognizes electronic signatures, which is very essential if you're going to do an electronic trade, and another country does not, then we have a problem. Then one is digitized and one is still using manual-based processes. And this slows down the process significantly. But when you look at certain countries that have digitized, for example, Singapore, recently the UK with the passage of the ETDA, it now creates a very effective trade corridor. Now, I simplify it because there are many different elements that come into trade. But what happens is that larger companies may have a legal team that may find some loopholes, ways in which to do their international trade or what have you. But if you really want to really open up the market for MSMEs, small businesses, it simplifies things. It not only creates that interoperability, but the alignment of laws now have standard set procedures. With digitalization, you have greater transparency, but also greater efficiency. So transactions can move very quickly. And also linked to this is the whole trade financing. Small businesses, as Sven has pointed out, have great challenges in accessing that finance. There is liquidity in the market, but are they accessing it? No, and there's a reason why. Because they may not be able to meet the financing requirements from banks because of the fact that they still haven't digitalized. They don't have that available data, as Sven has pointed out, that businesses can now use to not just monetize their operations, but really make it a lot easier to show how they're doing their business, where they're doing their business, and create reasons and unlock financing. So how do we go about doing this? Recognizing that there are significant gaps between countries, and legal reform can significantly unlock certain barriers. We have put in place and released just last week the Commonwealth Model on Digital Trade. Now, our intention is not to add an additional layer of bureaucracy. There are model laws out there, there are standards, and what we have done is that we have worked directly with the international developmental partners such as UNCITRAL to create one model law that covers all the major areas that you will really need to cover, that addresses reliability, trust services, electronic certification, that gives countries the options that they would need to consider if they want to digitize. Because a lot of countries know that they want to undertake legal reform and they know they want to digitalize their process. It's the how to do it. So what we've also done is merge the international best practice standards that are contained within the UNCITRAL model on electronic commerce, UNCITRAL model on identity management and trust services, the model on electronic signatures, as well as electronic transferable records, and also taken into consideration the 2024 model on warehousing receipts. Simply put, this can now, combined with the work being undertaken by DSI with regard to data standards, really allow for interoperability. And once the laws are enacted, it really lays that foundation. The rest, as they would say, can now work seamlessly. Once there's capacity and sensitization, of course, to accompany that. So I hope that this answers your question.
Thank you. I do have one follow-up. So we were in Namibia at the Commonwealth Business Summit a few months ago. How can members like Namibia actually transpose the Commonwealth MLDT domestically, and what's that kind of minimum viable alignment with those various other model laws that can actually unlock financing under that EBL, electronic bill of lading, or electronic warehouse receipts framework?
Okay, so countries that already have an electronic transactions law, it is very easy. So one of the things we do not presuppose is that you need to take the entire law and put it in place. If you have certain arrangements or legislation in place already and you just need to make certain changes, you can take the specific parts and enact it. So for instance, countries that may have enacted electronic transactions laws in the early 2000s will not necessarily have trust and identity provisions and may not necessarily deal with cross-border data flows within that legislation. And a lot of them do not have the standards for reliability, which is one of the cornerstones for really doing that electronic trade. So it allows you to bridge the gaps in your legislation. How do countries access that? Well, of course, the Commonwealth is able to provide that technical assistance to countries to help them analyze what is in existence within their current landscape, look at their major trading partners and do the economic impact analysis, and help them to make the necessary amendments to create those trade corridors that we really want to open up.
Thank you, Vashti. So we talked about opening up, trade corridors in emerging and developing markets. Let's go on to the second pillar that I'm really keen for us to cover, which is around inclusion by, we've called it inclusion by design, standards, interoperability, and women-led MSMEs. And I think we're all passionate about, when it comes to closing gaps, these are the underbanked and the underserved. Sven, I'm going to switch to you first, because I'm sure with you've been around for a while and you've seen quite a lot of change.
No age shaming, eh?
No age, very incredibly wise. But actually, what you've seen, probably, I assume, is that platform adoption has really remained quite slow, particularly in the structured commodity trade finance sector versus, you know, the pure trade finance and other ABL structures. What would you say are the key items that can really flip that around and allow those frameworks to scale? Is it legal? Is it operational change? Is it data change? You know, what's going to turn the dial here?
Big question. I will try, and I'm going to oversimplify and step on a lot of people's toes and whatever. But look, a lot of the platforms which I've seen was in a nutshell basically a secure way of communicating between parties, and not more than that. So in terms of actually accommodating the trade, it didn't really do the job. And that has, you know, a platform has always been, a platform works with the amount of people who use it, and that has always been difficult to scale up. So it's a bit like if you look at Facebook with 100 subscriptions. I don't think Mr. Zuckerberg would be very rich at this moment in time if it would stay with 100. So you need to have size, and it never really got to that, because also it is, as said, it is a communication. It is not basically accommodating the actual trade underlying. And Basti already said is that I will give it to you, Dipesh. I've been in commodity finance for 30 years, and we still use paper documents because the rest of the world we don't trust. We have tried to set up an electronic bill of lading. Yes, but there is too many parties involved. The one thing I want to say, which I call the game changer, is that now there is technology available to accept trade in its old-fashioned documents and everything, but it can use this. So now, because in the old ways, a platform, if you deliver a bill of lading, it is very difficult for a computer to read whatever the data is on a bill of lading and to figure it out. Now with AI, that has become possible. And that is the big game changer. So all of the, and I'm not saying we should stop by making e-bills and whatever, but alongside, you can absorb the trade as it is with all of its imperfections, but digitalize it now. And that is going to be a change. So it's not the platforms all of a sudden becoming, but now the tools are there to really make a change in the world of trade and make it easier for the people who are in it, basically. And that is relatively new, so we need to see how that develops. Commodity finance or trade finance is old, and it's not about a lot of innovation and whatever. But now it doesn't need to innovate in itself, because you can overlay it with tech, basically, which solves the issue of you having to change. That's what I see at the moment.
Well, I'm going to switch back over to Carol and flip this on its head. What is the actual problem that these solutions are actually trying to solve? Because I'm going to challenge Sven's point here. I don't think people really care about whether there's lots of paper or not, and feel free to challenge that. You know, I'm just looking at your lovely background, and I can see risk management, regulatory compliance. I can't read the others, but is that, you know, surely it's SMEs are trying to, and SMEs and lenders, frankly, are trying to solve for reducing risk, reducing fraud, and reducing the number of hurdles due to compliance and regulation, etc. What's your view on that?
I think if you look at, I mean, it's a little bit like Sven. We're in a very old industry and with very old people, but that's a little bit if I look at the mirror myself. but then also the tools we're using. So what are the your question, Deepesh, in essence, what are the at least in my view, the critical hurdles to overcome to roll out more successfully e-warehouse receipts and e-bills of lading, right? I think probably one of the first ones is legal readiness. So to what extent are the different countries in the Commonwealth able to, let's say, to come to a conclusion that it is legally, readily be available, that the laws are aligned with the Unie-Sucatral. Then in general, the commodity finance depth. If it's important that different countries, that there are people who understand what commodity finance is all about, allowing them to align with these new developments. Then I think what is also key hurdle is the ability of a country to have a registry for collateral infrastructure that can scale. Because without proper registration, then it will fail. And then regulatory tolerance for innovation. So you got a couple of hurdles in the different countries. If you look at where, and again, Vashti is more the expert, but where it is running already for some time is in the US with cotton. Cotton is a big commodity in the United States. There they work with e-receipts, which in generally are accepted by banks. There are different pilots in countries like Kenya. I think Vashti, you were commenting on, let's say, corridors like the Singapore-Kenya corridor or the Singapore-India corridor, where you can exploit that. But there are definitely significant hurdles to overcome.
Indeed, and I think digital islands are for sure a problem, and you know, Vashti question well, first a statement and then your thoughts on this. But you know, there's a lot of bilateral trade going on, and we've seen the developed countries adopting and enacting various digital trade laws, such as, you know, ETDA, the Electronic Trade Documents Act in Singapore. I think you've seen it in Bahrain, in France, ETDA in the UK, but you've seen it in Singapore as well, or equivalent. But they don't necessarily align with each other. I think we all have a trust issue as it's the industry, not us personally. But how do we really, what role can Commonwealth play to help prevent this digital island challenge within the Commonwealth states? Because that's a huge market that we can target there, and we could avoid that digital island problem.
Digital islands and digital silos is a problem. And as Sven has pointed out, while small companies and large in certain developed countries are rapidly embracing technology that suits their purposes and data to suit their purposes, this is not evident in certain developing parts of the world. And even it's not just small islands. For less developed countries or landlocked developing countries, these are real challenges. And we want no one to be left behind. So our remit is to how do you really promote that intra-Commonwealth trade and investment, and globally as well. And one of the things that we have identified that can be done is through that targeted intervention by trying to bring everyone on the same page. I know UNCITRAL has launched model laws for a long time, but you would have seen that there has been very limited uptake over the years. But the countries that have taken it up have really gone ahead and done very well with increasing their trade volumes. And that has worked. So what we want to do is establish that common plane. The other thing that is of interest is that so lots of countries are enacting DEPA, which is the Digital Economy Partnership Agreement, to create that corridor, very much like a trade agreement, and also encourage cross-border data flows. And one of the things we're also in active discussion with in the Commonwealth, and I'm sure that this is going to come up within the upcoming Commonwealth Heads of Government meeting is that whole discussion of entering into a sort of agreement among the countries to really put everyone on that common plane. So even if they have differing legislation, there's the agreement, for instance, with regard to trade flows, with regard to cross-border data flows, with regard to treatment of trade items and commodities. So that is something that we're actively looking at and considering. And I really hope that this answers your question, because I don't believe that there's a one-stop solution to this. This is an age-old problem. But as the markets and the global value chain evolves, we hope to evolve with it.
I fully agree, Vasti. But there is one, because you're mentioning it's very difficult for emerging markets. But look at Europe, just as an example.
Mhm.
In terms of the tariffs amongst countries in Europe are higher than the tariffs put on by Donald Trump. There is no electronic signatures. We say we have free movement of goods through Europe, which isn't the case. The amount of documentation. So I'm fully with you. But the sad story for me is that it's not a hell of a lot better in the developed countries actually than it is in the emerging markets. Otherwise, if we had it all sorted out, we could say, well, here you go, and overlay that there. We don't have that, so we're trying to figure it out themselves for at least 20 years, maybe 30 years, and we haven't solved it yet, and in where it should be easier. So I'm not very hopeful that it's going to go very quick, unfortunately, because
But
it
just
hasn't.
not to take up too much time on this, and you raise a very good point, because only very recently has France gone ahead and adopted the model on electronic transferable records. And France is a key trading partner, but they understand that if they really want to amplify that trade or put some degree of uniformity into it, then they need to undertake the necessary legislative reforms to unlock that. So I think that's a very valid point, well raised.
Can I ask a data question? And Carol, this one's for you, because obviously a lot of the work that Radar does involves, enterprise level, converting that kind of raw data into trusted application for kind of the CTRM sector. But when it comes to sharing that data outside of the entity, how is that being perceived in the industry? And I want to touch on that. Do we have a fundamental trust issue? Because at the end of the day, if we're not going to be willing to share our data, whether it's in paper format or in electronic format, we're not really going to get anywhere. And you probably have a good, you probably have good access and insights from some of your clients.
Yeah, data is not shared, right? I mean, if we would share the data we have, we would out of business. We would have been out of business almost before we start, because basically what we're doing for the bigger trading houses is basically enhancing and optimizing their risk management. Okay, by pooling data in a data lake and harmonizing and normalizing that. So we're sitting on very precious data, which are owned by the company who's providing the data, full stop. That we can subsequently conceptually anonymize the data and use that for different purposes. That's obviously a different ballgame. So the data is an easily used word, but you have to be very careful on how you deploy that and how do you work around it. Does that help you a little bit?
Do you think it's strange, because especially you say companies, but banks are prohibited from using the data they have, and they have so much data, but they're not doing anything. Which always is, if you look at the big tech companies, data is what they are, and they can use it freely and actually in a ways that we shouldn't want them to use it, but they do. And then we prohibit sort of the now real world is a bit of a I need to be careful there, but the you know, the banking world, the trading world is, yeah, there is a lot of prohibition of the use of data for yourself, and let alone sharing it with others.
Yeah.
Vash, what's your view on this? And I guess let's take a broader step in terms of Commonwealth positioning itself in terms of that cross-border data flows and you know, then you've got your national problems around online safety and security. You've got, you know, the WTO and various things happening there. What's your view from a kind of public perspective?
So from a public perspective, I will say that the whole element of cross-border data flows has been a bottleneck, right? And when we're saying cross-border data flows, this is the transactional data in relation to what you're shipping or what have you. We're not sending anyone's personal identifiable information out there, right? Certain countries have taken very restrictive approaches towards it. Certain countries are very keen on controlling and managing everything. Some countries are more open, right? What I will say to you is that because this has been a sticking point, that what we need to establish is common standards for what we're going to do with the data, how that data is going to be sent in an acceptable format, how that data is now going to be tested to make sure it's reliable and secured for trusted services. And I'm very grateful to the ICC. They have recently done the KTTDE toolkit that really looks at 36 of the legal documents that are used, that key transactional documents, and try to identify common data standards that companies can use. And it really simplifies the process. Because what I remember going through this with them, and they have showed me that different businesses use different data systems and different platforms, and therefore, you know, sometimes there's a whole interoperability issue, even when you agree to cross-border data transfer. So setting that common basis of standards that everyone can read from the same hymn sheet allows for that seamless flow. Now, it's easier said than done, but it sets the basis. And I think that a lot of companies are coming on board with its use, small as well as large. And I think that that is an excellent direction. And there are going to be other organic developments within the field that allow for companies to find ways to do their data sharing and cross-border data matching.
Thank you very much, Vashti. And I guess, look, as we kind of close this session, we've covered quite a lot, really. Data as the new commodity. We've talked about how do we bring, you know, how do we bring about inclusion and really level the playing field as a lot of the advancement around digital trade laws continue, but how do we do that in a sustainable way? And also, where does the capital come from? Before we go into the conclusion, we've got a lovely question from the audience, from Agnes. Thank you very much. With tariffs rising and banks pulling back, can fintech and blockchain-based finance, but I'm probably just going to stick to fintech there, can they really replace traditional lenders in managing political and credit risk in commodity trade? So specifically referring to commodity trade and commodity trade finance, you know, we've seen the retrenchment of capital, we've seen the increase in bar regulation and various other things. Can fintech close the gap? I guess the other piece here is can non-banks fill the gap? And, you know, Sven, I guess you're probably best placed to answer that one.
I think in you know, I worked for Deutsche Bank most of my adult life, so we in German we say "jein," as in that means yes and no. Yes, wow. Yeah. There is a gap, and yes, so there is room enough for alternative finances to step into that. That's without a question. And as I said, I come back to the size of the overall market. There is enough. there is enough, and there is no end to the need of liquidity to finance trade. So in that sense, yes. However, the problem is, and I keep on yelling, is the banks, although they're complaining about Basel regulation or whatever, banks have given a unique opportunity to have the most leverage on the planet and still make money. So they are uniquely positioned to do trade finance, basically, more than anybody else, more than alternative financing, because alternative financing, it's dollar for dollar. So the dollar you put in is the return you need to get. Banks only need to do a little bit of equity, a very tiny bit of equity, and the rest is leverage, cheap leverage. So you can make a hell of a lot more money or be cheaper, basically. Nobody has that on the planet. It's only banks because of the regulation. So instead of complaining about regulation, they should embrace it and put it to use for the rest of the world to do this financing. But the market is so big. So yes, there is the alternative financing. There is a space there. And if you do it right, I'm not saying fintech is a solution around fraud or other things. No, it's not. You just need to know what you're doing. And the tech at this moment in time, the availability of tools makes it better and easier for you to deal with risk. So you should embrace that also. But that should not be unique to fintech or alternative financing. That is for everybody, and especially also for companies to embrace, so that the risk is perceived to be lower, and it can be.
Thank you.
Can I make one comment?
Please.
I think that I partly agree with Sven, but I think that in the years to come, fintech can definitely play a role. If we look at the explosions of banks like, and they're totally not active in our kind of business, but like banks like Revolut, they have already bigger market cap than the bank I used to work for, which is Rabobank, in case they were listed. Okay, and I think that fintech are probably able to digitize and tokenize portfolios much more efficient than banks are, who have the balance sheet to take the risk. So I think that while fintech probably does not have the balance sheet to take risk, they have the mindset and the technical ability to distribute risk. And it's all about distributing risk to bridge the gap between supply and demand of liquidity. Okay.
Yeah. Thank you very much. And Vash, I'm going to change the question slightly, but what's the role of public-private partnership with regards to this?
I think you've really touched on what I really wanted to address. Even with laws in place, even with standards in place, there needs to be that level of public-private partnership in order to really get MSMEs, wow, on board. And that is really because these companies need that capacity, they need that sensitization. They outside of accessing tech, they also need to afford the tech. And they also need to be trained, not just in the whole entrepreneurial, but in terms of monetization of their data analytics, how to really integrate themselves into this new data-driven economy. And public-private partnerships, I really do believe, is the key to unlocking that. But the larger companies really do taking on board and creating that innovation culture and innovation hub environment. So that is, I think, key and critical in moving forward.
Thank you very much. And look, I think we've covered quite a lot of ground here, and I really want to sincerely thank Commodities people for putting such a fantastic webinar on. I think just generally from what we've discussed, global trade keeps expanding, and I don't think anyone here doubts that's going to stop. And it's important to consider the balance of not just goods trade, but also service trade. We need to remember that these large trading houses are kind of, you know, the darlings of banks, but actually to enable proper growth and proper inclusion, we really need to think about, you know, the SMEs and the mid-cap firms, because their data and information is fragmented. It continues to be kind of unreadable to lenders. I think we can safely conclude that artificial and intelligence and digitalization are a game changer. It's not just the blockchain hype that I am guilty of reporting on 6 years ago. It's actually a real game changer to level the playing field from lots of different areas, but mainly structuring unstructured data. Yes, data is every trader's most valuable asset, but if it's harnessed properly, the internal data can be used to make decisions. It can demonstrate compliance. It can build resilience to this asset class and industry, and ultimately attract finance. And for SMEs, it can mean, you know, you can turn data from a liability into collateral. And finally, the legal reform, legal reform is happening. It's critical, and legal reform is helping drive interoperability. And congratulations to the Commonwealth for driving, you know, a huge piece around the model law and digital trade. And Google MLDT, or search for it on ChatGPT if you want to find out more about what the Commonwealth is doing. But that really is helping align, you know, UNCITRAL instruments on e-commerce, e-signatures, and e-transferable records. So look, the next frontier is down to you, and it really is inclusion by design. Vashti, Carol, Sven, thank you very much for joining us on this commodity trade finance webinar. Been a pleasure.